So Trump uncertainty, and I guess that's the headline, President-elect Trump or soon to be President Trump. I guess he's not really a new president. We've seen him in the White House in 2016 to 2020. So not a new president per se, but definitely taking over again from President Biden. And I can't tell you how many, I guess, questions I've had about the new president or President Trump going back into the White House. What does that mean for investors? What does that mean for investors' portfolios? And actually had a few email messages, a few calls over the holiday season asking me, you know what, Alan, should we sell our investments or sell partially our investments or maybe sell some of the more volatile names before the inauguration, before President Trump get sworn in and take over and go back into the White House. And people are nervous. They don't know what to believe. They don't know what he's going to say. They don't know what's going to happen with respect to his plan for tariffs and all the other things he's talked about over the last little while. And that uncertainty has definitely played out with consumers, with Canadians. Our first chart here clearly shows this. Clearly shows that what's been happening is definitely having an effect on the consumer. Consumers are losing confidence here in Canada. They're losing confidence because they believe that what's going to happen is perhaps not good. If tariffs are put on all goods coming from Canada into the United States, 25% tariffs, could there be job loss? Could businesses be significantly affected by these tariffs? And you could see that ever since the new president was elected back at the beginning of November, confidence, consumer confidence has definitely waned. It's definitely come down. And, what I tell individuals about this is you just don't know. We don't know what, number one, is going to happen. We know that the former president likes to say something and then perhaps step back a little bit from his initial commentary. He kind of goes for all or nothing at first and then scales back to perhaps a lesser position on what he is asking for. And we've seen that time and time again when he was in power his first time during 2016 to 2020. He came off as the lion, going for broke, going all in and asking for the world, and then over time scaled back. And perhaps that's his negotiating tactic. So not sure what to think about that. At the same time, I know and that many investors perhaps are letting emotion factor into their investment decisions. Whether you are a Republican or a Democrat in the US or conservative or a liberal up here in Canada or NDP, don't let your political views shape the way you invest. You kind of have to take an unemotional look at your portfolio, at the stock market. And that's where investment advisors should be able to help you. I try to take an unemotional look at all my clients' portfolios, whatever happens, whether you are a fan of President Trump, whether you don't like the way he acts or what he says, etc. You just can't let that affect your investment decisions. Perhaps make you do or lead you to do something you would not have done just because you're not, or you wouldn't be a Republican if you could vote in the US. You'd be more, a Democrat, etc. So I just think that you got to take the emotion out of what's happening the best that you can. At times it's difficult. I realize that. But if you're going to be an investor over the next little while, you really have to look at the facts. So what are the facts? Well, let's take a look at President Trump's last 4 years when he was in office. We have a chart of the S&P 500 going back to 2016, and you can see clearly here that the S&P 500 did extremely well during his first 4 years that he was president. You see over here on the right-hand side, the chart sort of tail off, and that was because of COVID, right? We got into 2020 and everything sold off, and I don't think anyone could blame the Trump administration for that. You want to look now, we have our next chart here, which is again the S&P 500, but this is in the last few months. It shows you what happened when he was elected in November. So this is obviously a shorter term chart showing what happened. And clearly, investors liked what they saw on both sides of the border. Markets went significantly higher from that first week in November when the president was reelected. So clearly, the markets have benefited from President Trump in the White House the first 4 years. And I guess if you're going to go by history, you would think that the next 4 years perhaps shouldn't be much different. So what we want to do now is, and what we've done, is kind of look at a few pros and cons of President Trump back in the White House and kind of take a look at it from that perspective. So here you have on the pro side. Let's go with that first. Business friendly. We know President Trump comes to us from the business world, a real estate tycoon, being in real estate, and he's written books, and there have been many books on things such as the art of the deal. We know that President Trump is good at negotiations. We know that he is a good businessman, and so he will be business friendly. He will put in place policy that will be friendly to business, big business, small business. And the hope is that all the different policies that the Trump administration puts into place will benefit business. And if it benefits business in the US, you have to believe it's going to benefit business up here in Canada. Because as we know, and as I've said many times on our show, we export about 70%, maybe a little bit more, of what we build and pull out of the ground to the United States. So business-friendly environment in the US will help us here in Canada. Business-friendly, what does that mean? Well, it means lowering taxes. President Trump has talked about lowering taxes down in the US, perhaps as low as 15% for businesses that do business in the US. For businesses that do business outside the US or globally, he still wants to keep taxes low, perhaps 20, 21%, which is still historically low. So lowering taxes, another positive for stock market and the economy. Reducing regulation. What does that mean? Well, cutting red tape. We all know all the different hoops and hurdles that you have to go through and jump over to get things done in Canada, in the US, and in any country. So the president has spoken about in his administration, the people that he's already named for certain positions within his administration, they've talked about reducing red tape, reducing regulation, deregulating, making it easier for people to grow, for businesses to grow, for businesses to merge, take over other businesses, for businesses to go public, and many other things. He's talked about even cryptocurrency, right? We've talked about this on this show before. He wants the United States to be the cryptocurrency capital of the world, which is something that the previous administration kind of stayed away from. And probably the number one thing that I always fall back on when I talk to individual investors that are nervous is this last point. He sees the stock market as an indicator of success. It's his barometer. It's how he measures his success. The first 4 years he was in office, and even recently, he has said that the stock market flourished under his administration while he was president of the United States, leader of the free world. The market did extremely well. And as we saw just a few charts ago, he is correct. Prior to COVID, the economy was doing really well. Stock market is doing really well. So if you look at it in those terms, he's probably not going to do anything that's going to make the stock market fall for a prolonged period of time. Yes, there are things at times that he says or does that have short-term negative effects. But overall, if he's measuring his success based on the success of the stock market, you have to believe that he's not going to do anything that will hurt the markets long term, and in fact, do things to hopefully make the markets move higher. So what do we have on the con side? Well, let's start off with the second point, the unpredictability of the president. It's funny, in the first 4 years, I actually went on to Twitter at the time. I know it's called X now. And I started to follow the president. And you would ask, well, why would you do that? Well, I did that because any commentary that he made was made a lot of times through Twitter. And he would tweet out an opinion, a commentary, and he would move markets that way. Kind of interesting. He would say something. And he's been doing it already through his Truth Social Twitter posts and his Truth Social, his publicly traded company that you could actually buy shares of if you wanted to. But he's been tweeting out a whole bunch of stuff with respect to our first point, which are tariffs. And if you want to know what he's thinking, definitely you should follow him on Twitter. I think you can gain some really good insights, especially if you see the market moving and you're not sure as to why. Possibly because the president of the United States, or the soon-to-be president, tweeted something out. But The number one con, obviously, are tariffs. And we just don't know what that is going to look like. We know what the president or the soon to be or president-elect has said about tariffs, but we're still not sure as to uh, what the tariffs are going to look like. If everything is going to have tariffs put on it, there's been some talk recently about that, which we'll talk about in our quick hit segment, that maybe he's not going to put tariffs on all goods. Maybe he's just going to pick and choose which ones he feels need to have tariffs put on them. So overall, I guess if I had to make a general statement, I would say don't generalize it and think that because you may not like the president-elect, his personality, what he says, his demeanor, how he acts, don't let that affect your investment decisions. If you do, it may lead you down the wrong path. There are definitely some pros to the markets, to business of the president-elect when he comes into power. Obviously, there are some negatives as well. So I think you have to take everything with a grain of salt. And that's where wealth management comes in, money management comes in. We need to, and we will continue to react to what the president says going forward. You have to be ready to do what it takes to change your portfolio if necessary, if that's what it takes. But that is what consistent management is. And that's what I recommend. I recommend everybody take a step back and let's see how things pan out over the coming quarters before you make any decisions based on your portfolio because of the new Trump administration.